Deirdre Bosa. Turning back to the broader markets now, for years, falling yields have supported higher stock prices. In fact, St. Louis Fed President James Bullard on Squawk Box this morning said that's why he's not too concerned about the stock market's relatively high level right now.
We always watch this, and we watch financial stability issues and bubble-type issues very carefully. I think that conventional wisdom is that valuations look high, but not at this level of interest rates. And so to the extent you think this level of interest rates is probably the future, which I've been arguing, I think we're okay for now.
Looks more and more entrenched, that's for sure, although today's stocks and yields are both declining. Joining me to talk more about this are Paul Christopher. He's the head of global market strategy at Wells Fargo Investment Institute, and Rich Weiss is chief investment officer of multi-asset strategies at American Century Investments. Welcome to you both.
Thank you.
Rich, I'll just start with you. Is Mr. Bullard right that low yields are here to stay? Is the flip side of the coin of that permanently higher stock prices?
Well, I don't know about permanently higher. We've been neutral on the market for some time. Clearly, low interest rates are helpful for PE multiples. And in fact, that was the whole story in 2019. Lower interest rates, surprise change in the Fed's policy, and you get the multiple expansion. But this year, even with low interest rates, you're going to need to see earnings come through to move stock prices higher. Depending on various other issues, both COVID-19 and economic issues, if the Fed lowers rates, maybe you'll get a little more PE expansion. But this year is really about earnings. And so far, as we've seen from fourth quarter 2019, they're just not coming in. So we're a little concerned about permanently higher stock prices from here. Okay,
Paul, let's talk about the action today a little bit. Yes, you have bond yields, including that 30-year at record lows. It's notable, first of all. Stock prices, though, are slipping. Gold is moving higher. I got a lot of emails and comments from people who are very excited about the upward move in gold, the bulls who have been waiting for this for some time. But you also have copper up, which usually, if this was a sign of kind of global doomsday because of spreading coronavirus, you name it, you wouldn't expect, the metal with a PhD on the economy to be moving higher today. So, how would you describe the action that we're seeing here?
I'd still call it cautious. We have been cautious on equity markets. We also believe that this year will be a year when earnings are going to matter a lot. We came into the year with the consensus looking for 10% growth in earnings. We're only looking for 7% growth. And with lower interest rates and some modest earnings growth this year, we still think this market can move higher from where it had been, let's say, before this week and before the selling.
What about, Rich, I'll turn to you, the spreading coronavirus. We'll get an update in a moment on the numbers exactly. But, as it stands, anecdotally, people are more and more concerned that it's coming to their doorstep.
Oh, no question. And, putting aside the horrible human toll for the moment, there's a real economic impact. Originally, we all saw coronavirus similar to SARS or MERS, and clearly it's much more infectious than that. So the market's trying to get a grip on that because there were severe economic impacts. Chinese economic growth in the first quarter widely expected to be reduced by 25% or more. I think somewhere around 6 handle down to maybe 4.5 or lower. The market is adjusting to these issues. And that means slower global economic growth, of course, maybe by 0.5% in the first quarter. And as the evidence unfolds, there's more to come there to the downside, potentially.
So, Rich, what would you be a holder of? Do you stick with bonds? You sound pretty defensive. Do you stick with bonds, which, themselves have, you could call it valuation problems? Do you look for, high dividend yielding stocks? Where would you be?
Well, we're a little barbelled, stocks and cash. Bonds have had a nice run. In fact, I think long bonds are now winning the race so far in 2019. But stocks, there's in this flight to safety, the safe havens are winning, which typically means U.S. large cap growth equities, and that's where we're overweighted right now relative to other equities. But again, to be clear, we're not throwing money at the stock market right now. We're remaining neutral to our long-term position. Yeah.